Good morning, Mark Soderberg with ADM Investor Services with your morning egg market outlook for Friday, February 28th. Happy Friday to all. Prices across the egg space have turned mostly higher here as we try to stage a nice recovery here off of yesterday's sell-off. Corn right now is 1 to 2 better in old crop, steady on the new crop. Soybean prices are higher across the entire complex. Let's call it 3 to 5 better in the beans, steady to a buck better in the meal, while oil prices are up about 10 to 15 points. And wheat is really the upside leader now, 2 to 6 better. Chicago wheat leading the way, making new highs here. As expected, there were no deliveries against March corn, no deliveries against March beans either. However, there are 79 contracts registered for delivery with the exchange. Elsewhere, deliveries were pretty much in line with expectations at 641 against the meal, 792 for the oil, while Chicago wheat saw 466 contracts put out for delivery and 314 with Kansas City wheat. Speculative traders, they were big-time sellers in corn yesterday. We had them unloading nearly 25,000 contracts. Their long position now is likely dipped back under 300,000. Of course, yesterday's data will not be accounted for in this afternoon's CFTC report. That covers positions through Tuesday's close. Elsewhere, funds were sellers in the beans, meal, and wheat, while pretty much flat in the bean oil. We have the large spec position in Chicago wheat back up to about 85,000 contracts, while in beans, we're thinking money managers are pretty much flat now. I think yesterday's price action or price plunge in the feed grains could be attributed to a number of factors. Export sales were weak in the corn and wheat, so-so in the soy complex. President Trump did announce that 25% tariffs on imports from Canada and Mexico would go into effect next Tuesday, where just the previous day had indicated they would begin on April 2nd. Combine that with a surge in the U.S. dollar yesterday, and the USDA Outlook Conference showing a larger than expected switch of soybean acres to corn, I think all contributed to the price plunge in the feed grains. Late yesterday, the Buenos Aires Grain Exchange did report improved conditions for Argentine soybeans. 24% of the crop is rated good to excellent, up 7% for the week. They did not show corn ratings, or at least I did not see updated corn ratings. However, they did report harvest has reached just over 5%, which is historically higher than the normal average at this point. No change in South American weather. Northern Argentina along through southern and along eastern 2/3 of the growing regions for corn and soybeans in Brazil remain dry. Heavy rains are expected to continue across the central and southern portions of Argentina through the first week of March, with some isolated flooding likely to occur. In the U.S., we saw a big jump in the drought readings here across the central Midwest in yesterday's update. Corn acres in drought, that jumped 11% to 56%, while bean acres in drought jumped 10% to 46%. Both are well above year-ago levels. Mostly dry conditions across the Midwest through this weekend before the next winter storm begins to form early next week as the system slides north and east. It's expected to bring about 1 to 2 inches of rain across much of the central Midwest and eastern Corn Belt. Lighter amounts for the western Corn Belt and the southern plains, and still very little precipitation over the next week to 10 days in the northern plains. May corn seems to be trying to build some support near that 480 level. We'll see if we attract some export demand on this price plunge. Beans also finding good support near its 50-day moving average in the May contract. We do get an update from the EIA later today on renewable diesel production capacity and feedstock usage. And wheat prices, again, trying to recover from the recent sell-off. I think the upside could be limited. U.S. weather remains mostly non-threatening. Thanks for listening, everyone. Hope you have a great Friday and a great weekend.